Tesla has purchased $1.5 billion worth of Bitcoin. Now, this obviously had some positive impacts on the market. Bitcoin increased immediately around 16% or so on this purchase, showing the market responded quite positively, at least in terms of Bitcoin. Tesla's share price, however, didn't see quite the same increase. Tesla's share price, it still kind of muddled along in a positive manner, but certainly not 16%, which is relatively unsurprising given it's a large corporation and not inherently tied to Bitcoin, but still it tells you the market was kind of lukewarm about this decision. Now, part of the reason for this could be some barriers toward using Bitcoin long term as an actual way to buy and sell cars, but also part of it could be due to the sheer amount of information that is either positive or negative about Bitcoin. So we've seen central banks come out and say, well, people who are investing in Bitcoin could lose all their money. Now, some people are sort of saying, well, they're doomsayers, and they don't really know what they're talking about in relation to Bitcoin. They don't understand that Bitcoin is potentially a very finite resource, and there's only so much supply of Bitcoin, and it increases at such a rate. And therefore, it is rare, and therefore, much like gold, it should have value. So that's what effectively some people are saying to counter those central banks. However, Bitcoin is notoriously incredibly volatile. Bitcoin is not really working as a store of value or a proper hedge in much the same way as gold does. So we really can't treat this as being an equivalent to gold, and we really can't treat it as being necessarily a safe investment. And there are some broader implications about whether you really want a corporation speculating about any asset, be it Bitcoin, be it a commodity, be it whatever, any asset that is not core to their underlying operations.